I used to be the type of person who opened my eyes and checked the market, SP 500 up? Happy. Nasdaq down? Worried. One day I could be excited, then a few minutes later I would be depressed because of a red chart. I thought I was investing, but in reality, I was living the market. Every up and down made me stressed, until one day, I decided, I'm going to invest in a way that helps me sleep well, not lose sleep over stock prices. And that's when I started my investing journey without checking the market every day. No need to guess the top and bottom. No need to live in anxiety, just a simple strategy that works automatically. In this video, I'll share the whole process, how I set up my ETF portfolio, the tools I use, and why quitting the habit of checking the market every day was the best thing I ever did in my investing journey. You know that feeling? You just invested a few $100s in an ETF or a stock, and then, just checking to see if it's up today, 3 hours later you're still refreshing the app. I've been there, and I'm not alone. I know a lot of people who fall into that trap. We live in an age of constant notifications, real-time data, charts that dance by the minute. When you invest, especially when you first start, the feeling of owning a piece of a big company makes you want to control the outcome immediately, and then, every time the price goes up 1%, you feel like you won the lottery, down 2%? You start to panic, but here's the thing, the market wasn't made for you to check every day, it was made to grow over time. Many psychological studies show that people react more strongly to losses than to gains. For example, you make $50 and feel good, but losing $50 makes you feel twice as miserable. This is called loss aversion, and when you check the price every day, every small drop will trigger that negative feeling. It makes you excessively anxious, prone to impulsive decisions, unnecessary selling, missing out on long-term gains. I remember clearly in early 2022, the US market crashed, tech stocks plummeted, the SP 500 lost nearly 20%. Every day I turned on my phone was a day of anxiety. You know what's worse than a falling market? It's the feeling that you have no control over something, but you keep staring at it. I sold some stocks I believed in because of short-term fear, and 6 months later, they recovered, and I lost my profits, and learned a hard lesson. Every day you open your phone, see the red portfolio, you ask yourself, should I sell to cut my losses? Or should I buy more because the price is cheap? But if you don't have a clear strategy, every action you take is just a reflex, and investing is not a reflex game, it is a game of long-term vision. The market is always volatile, that's its nature. 2020, COVID market plummets, then recovers strongly. 2022, inflation drops sharply, many people sell off. 2023, Fed raises interest rates, some people still profit if they are patient. The difference is not who predicts the trend correctly, the difference is who has the ability to stay calm, not panic, and stick to a long-term strategy. I remember the day I was really tired of investing. I came home from work, opened my phone, and saw that my portfolio was down 3%. I stood in front of the door, unable to get into the house. The only question in my mind was, will I lose everything? At that moment, I no longer thought about my long-term financial goals. All I saw was red and mixed emotions. Then I looked at my son, who was playing with his toys, waiting for me to come in for dinner, and I realized I was letting the market control my emotions. It sounds funny, but the first change I made was, I took the investing app off my home screen, not deleted it, just hid it. Put it in a folder far away on the 5th page of my phone. At first, I was still itchy, but after a few days, I realized, if I don't see it, I don't think about opening it. And that was the first time in months that I didn't check the markets for 48 hours straight. I started asking myself, if I really believe that long-term investing works, why am I acting like a short-term trader? This question helped me reset my entire investment strategy, and I rebuilt everything based on 3 words: automatic, simple, long-term. I chose 3 ETFs, VO, SP 500, invest in the 500 largest companies in the US, SCHD, Dividend ETF, provide stable quarterly income, VXUS, International Market ETF, diversify your portfolio. I don't need to read the financial news every day to know how Apple or Microsoft is doing today, because I own them all in one ETF. Here's what I set up. Every month, on payday, $800 is automatically transferred from my bank account to M1 Finance. M1 automatically splits the money, 60% to VO, 30% to SCHD, 10% to VXUS. Dividends are automatically reinvested. I don't have to do anything. No need to watch the right day. No need to think, what should I buy today? Every month, I invest even if I forget about it. Instead of checking every day, I set up 2 fixed schedules during the year, 1/1, beginning of the year, 1/7, mid-year. I open the portfolio, check, are there any major changes, are the allocations still correct, do I need to rebalance the portfolio, that's it. 20 minutes. Done. No checking every day, no stress, no getting caught up in things that are out of control. After a few months, I realized something extremely important. I don't need to check the market every day. To still be a good investor, I spend time reading, walking, playing with my kids. I can look at the red market and not feel anything, because I know my plan is still working. Every day. Every week, I don't need to know if VO was up 1% today or down 0.5%. I just need to know, I am still investing, and I am getting closer to financial freedom. Okay, so in the previous part 1 told you why I stopped playing with charts every morning. Now, I will share the step-by-step details of the tools I use to build a self-running investment system. No stress. No guessing the market. No need to be a financial expert. I chose M1 Finance because it has an auto-invest feature. It allows you to break down your portfolio by percent like a pie chart. Dividends are reinvested automatically. There are no ETF transaction fees, of course. You can use other platforms like Fidelity, Charles Schwab, or Vanguard, as long as you can automate as much as possible. The portfolio I created consists of 3 ETFs, name type percentage, VOSP 500, US, 60%, SCHD Dividend, US, 30%, VXUS International 10%, VO. Invest in the 500 largest US companies. Long-term, stable growth, SCHD, receive regular quarterly dividends, like passive income, VXUS, add diversity, not just focusing on the US market. I call this a simple but complete 3-tier pie, growth, VO, income, SCHD, diversify risk, VXUS. I opened an account with a bank that has an auto-transfer feature, set up as follows. Third of every month transfer $800 from checking account to M1 Finance. After receiving the money, M1 automatically allocates to ETFs according to the preset ratio. I chose the third because my salary usually comes in by then. You can choose any day that fits your income cycle. ISHD pays quarterly dividends, VO and VXUS do the same, although less. I have auto reinvest dividends enabled on M1, so every time dividends come in, the system automatically reinvests them into the original ETF, no excess cash. No action required. Instead of opening the app every day, I choose 2 days a year. January 1st, year-end review, reset goals, July 1st, mid-year update. I will check, is the portfolio percent off? If yes, rebalance. What is the yield? Have I changed my financial goals? The total of about 30 minutes/time is enough, and that's it. I don't need to touch it for 6 months. I have a Google Sheet. Every time I check in periodically, I record portfolio value, amount invested, total dividends received, percent gain/loss. It's not complicated, but it's helpful to see progress, and most importantly, it helps me focus on the process, not on the momentary emotion. 1. I don't read financial news every day. 2. I don't follow price movements hourly. 3. I don't chase hot stocks that are trending. 4. I don't invest emotionally. With these 4 things out of the way, I find myself living healthier, working more efficiently, and still investing effectively. I am no longer stressed about the market. I invest $800 every month regularly. My investment account is up more than 20% in 2 years. Most importantly, I believe in my strategy, and I have time to live instead of just thinking about money. If you've ever been addicted to opening investment apps, you'll understand me. Waking up in the morning, opening your phone, eating breakfast, surfing the market, checking VO's price today before going to bed. I used to believe that following the market was an investor's responsibility, but now I think differently. It's a mental trap. Back then, every time the market went down, I felt like a failure. Portfolio down 2%? I felt anxious. News about rising inflation? I wanted to sell. Someone else boasted about buying a stock that was going up. I felt like a failure. I didn't have a clear system. I invested on impulse. I bought and sold and bought again, without knowing where I was going. It was like a toxic relationship with money. I was always afraid of losing. Since building an auto-invest system, everything has changed. I think less about the market. I invest regularly even when the market is down. I have time to focus on work and family. I sleep better, knowing my plan is still running smoothly. 1. I have more time for my family. Before, I ate dinner while burying my face in apps. Now I turn off my phone, play with my kids, chat with my wife. 2. I read more. Instead of reading the news, what did the Fed say today? I read books about personal finance, long-term investing, behavioral psychology. I understand myself better. 3. I compare less. I no longer care how much other people make. I only care, am I getting closer to my goal of financial freedom? You know what's changed the most? Not how much my account has grown. It's that I'm no longer afraid of market fluctuations. When the market drops 10%, I don't shake. When bad news hits, I don't panic. When everyone else is panicking, I still live as normal, and that's more valuable than money. Psychological freedom. I don't invest to win. I invest to not worry. If you're still here listening to me tell you this story, you're probably like me, someone who wants to take control of their financial future, but is dragged down by the numbers every day. Not how to pick stocks, not tax tips, not how to read the market better than anyone else. Financial freedom doesn't come from controlling the market, it comes from controlling yourself. I used to ask, how do I invest at the right time? What is the best thing to buy today? Will the market go up this week? But those questions left me reeling in anxiety. Now, I ask only one thing: will this strategy get me closer to financial freedom without destroying my peace of mind? I no longer gamble. I no longer wait for a good market to start. I invest like a farmer sows seeds, so regularly. Don't worry about rain or shine, because I know, if I am patient, the harvest will come. 1. Start simple. 1 ETF. 1 investment account. A small amount of money each month. 2. Automate as much as possible, so you don't have to remember. Don't have to watch. Don't have to guess. 3. Stop looking at the market every day. Look at the life you want to build. That's the market you need to care about. 4. Be patient. Results won't come in 3 days. But in 3 years, you'll surprise yourself. I invest because I want to have time to pick up my kids from school every afternoon. I want to not panic if my car breaks down. I want to quit my job when it no longer makes sense. I want to live a life that is not dependent on a paycheck, and you deserve that too. Thank you for being here to listen to this not so spectacular, but true story. I'm not as rich as Warren Buffett. I don't have $10 million, but I have a plan. I have discipline, and I have peace, knowing I'm on the right track. If you found this video helpful, please like the video, subscribe to Money_VSQ channel, comment below, how have you ever been caught up in the market? And what do you want to change from today?